Welcome to our deep dive into China's economic strategies. We're going to uncover the real signals behind the headlines and why staying ahead means looking beyond the news. When it comes to China, most people think they're staying informed by watching the news. They track the headlines, follow the market recaps, and wait for announcements from Beijing. But if that's your strategy, you're already late. By the time something hits Bloomberg, Reuters, or even the local papers, it's already been priced in. The contracts have been signed, the corridors built, the partnerships aligned, the noise arrives after the signal. And the signal? It was moving quietly, through liquidity releases, trade pacts, internal policy guidance, and infrastructure approvals that never made the front page. So, here's what we're going to break down today. Why the real signals aren't in the headlines where they actually show up, and what it means for anyone in Singapore or ASEAN looking to stay relevant, early, and ahead. Let's start with what most people see. Open up your newsfeed and you'll see all the usual suspects. Trade war rhetoric, election season posturing, warnings about China's real estate market, or maybe a flashy space tech achievement. And while all of that is technically true, it's not useful. Because while the headlines scream about tech crackdowns and political risk, China is quietly doing something else. It's laying trade infrastructure across ASEAN. It's signing bilateral agreements with countries most people overlook. It's extending RMB-based credit lines to fund projects no one's watching. It's upgrading logistics capacity in Tier 2 cities no mainstream outlet bothers to mention. Let's delve into some examples and the broader implications. You see, China's approach isn't just about immediate gains. It's about setting the stage for long-term success. By focusing on systemic changes, China ensures that its growth is sustainable and resilient. This strategic foresight is what sets it apart on the global stage. This is how China operates. It doesn't signal strength with words, it builds systems. And it's those systems, not the narratives, that shape what's coming next. Let me give you an example. Earlier this year, most international coverage focused on China's GDP targets and regulatory shifts. But what didn't make headlines? A wave of RMB-denominated credit lines extended to Tier 2 industrial zones in Guangxi, Sichuan, and Hunan. These aren't tourist destinations. They're export corridors, manufacturing nodes, and logistics hubs being prepped for cross-border flows. These moves didn't get coverage, but they got funding. And that's the difference between what's happening and what's reported. Another example, China's trade pacts with Latin America. These bilateral MOUs didn't make your newsfeed, but they came with digital infrastructure projects, green energy partnerships, and joint financial settlements. All part of China's broader push to reduce reliance on USD and expand RMB reach globally. Why does this matter? Because by the time these agreements become official policy, the players who matter will already be positioned. There are significant implications for Singapore and the ASEAN region. Understanding these early moves can provide a competitive edge and ensure that local businesses are not left behind in this rapidly evolving landscape. The companies will already be registered, the warehouses will already be leased, the local partners will already be locked in. And if you're based in Singapore, or anywhere in ASEAN, this should wake you up. We are at the edge of a new wave of regional restructuring, and Singapore, with its legal clarity, financial trust, and neutral positioning, is still the best place to anchor the back end of what's coming. But only if we move early. If you're waiting for a ministerial announcement or CNBC segment to confirm the next China shift, you're not just behind, you're out of the room entirely. The signal doesn't show up in the media. It shows up in construction approvals, liquidity injections, and deal flow beneath the surface. So where should you be looking? Start with liquidity releases. When China lowers the RRR or signals interest rate changes, it's not about domestic demand. It's about prepping the system to finance outbound moves. Watch where RMB-denominated credit is flowing. It's often tied to corridors China is about to scale up with infrastructure support. Look at port expansions, special trade zone upgrades, or inland rail extensions, especially in provinces that don't show up on most foreign investor radars. And finally, track which ASEAN governments are signing silent agreements. If you know someone in logistics, finance, or trade, you'll hear it before it's ever written about. Now, let's talk about the opportunities and what you can do next. Stay informed and keep an eye on these indicators. They'll guide you to where the real action is happening. Don't miss out on the chance to be ahead of the curve. The future is ripe with potential, and the key is to act now. This is where the real opportunity lives. It's quiet, it's early, and it's moving fast. Most people will keep waiting for headlines, waiting for confirmation, waiting for everyone else to validate the move. But by the time they do, the leverage is already gone. So what does this mean for you? If you're a lawyer in Singapore, specialize in cross-border compliance and RMB-aligned contracts, you will be in demand sooner than you think. If you're in finance, understand how to structure flows that pass through Singapore before going outbound. If you're in logistics, look at the shift from Tier 1 ports to underutilized inland trade zones. If you're in consulting, build the bridge now, while clients still need guidance. Once the game is set, they'll just look for operators. The winners won't be the loudest, they'll be the earliest. And if you want to track these signals before they become noise, we've built a private Telegram group just for that. Drop a comment with "in" if you want to join our verified update circle, designed for Singaporeans who want real insight, not just news.